Welcome back, TMT traders, to a new edition of your weekly Forex Outlook. So let's just start out first of how things developed from last week. So we expected a dollar downturn, which basically happened, although marginally we did not see a new weekly low. So this is purely from a technical perspective. And so the developments from last week, including over the weekend, basically one key thing is that we could see dollar strength in the next, maybe not throughout the whole week, but for at least 1 or 2 days, if buyers are going to get lured in based on the United States' president delaying the tariffs on Chinese goods. And so if that's something that traders will buy into, we could see dollar strength. However, what we have to know is that it's only going to be something that is short term, and by short term I mean a maximum of 1 or 2 days. That said, if it doesn't basically go into forming a new high on our charts, so what that could give us is really a retrace from the lows into the middle and the 50% Fibonacci of this candle, technically speaking, and that could be an actual selling point that we would look for an opportunity on the US dollar index or US dollar Swiss franc in this case, and to sell this possible opportunity, sell into this opportunity. Now, there's no way to know how will that happen or when, but it's definitely something that we'll have to keep on our watch list. So you can see how the daily is really just ranging, so we're waiting on multiple time frames to see how this trade can actually develop. So the 4-hour here gives a better perspective than the daily, so any run towards that 50 EMA on the 4-hour, which ends up in a lower high and some resistance, we could see traders coming in and taking another sell on this. That said, this could happen either as soon as the US market opens, or if traders want to buy into based on this optimistic sort of progress between US and China trade deal. If they want to buy into that on intraday, then this might come only from the midweek onwards. So we'll have to keep an eye on that. At the same time, two more important things on the US dollar this week which we have to look out for. One of them is the GDP estimates for the US. Again, GDP plays a great role in measuring inflation and future economic projections and growth, as well as the PCE inflation, which is the Fed's preferred measure of inflation. So again, that will be closely watched, and we shall see where this dollar is heading. So just to switch on this dollar index for now, we can see that we are still above the 50 EMA. And while if we look throughout the mainstream media, everyone will look at a possible and further continuation, a downturn on the US dollar. However, it's one of those inflection points which it could go either way, and that's why instead of just looking at one thing, we should basically look at all the dollar pairs and then look at the fundamentals of what the data is saying, and then basically go from there. Now, another thing which is quite interesting is overnight again we had Westpac, a major Australian bank, anticipating 2 rate hikes on their economy. This is the Australian economy, which would put the Australian dollar at a 1% interest rate. Now that is marginally lower than the 1.5 that they are right now, and if that's something that the bank is looking at, it's not good news for other Australian traders who possibly want to get in long. So if anything, things would take a downside turn once again. There's not one thing that we can again take away from this is that usually in times of dollar weakness or dollar uncertainty, or even euros on uncertainty when it comes to the euro or the pound, we usually see safe haven inflows, and those safe haven inflows based on commodity currencies can occur on the Australian dollar and the New Zealand dollar, or even the Canadian sometimes. However, if this is the case for the Australian dollar, that we can disqualify it due to these possible rate cuts. I'm not sure if I said hikes earlier, but it's cuts, so rate cuts, 2 rate cuts. And if that's the case, then the Swiss and the Japanese yen would become safe haven, which would be quite a turn for this week's sort of event, because we were waiting for this Australian to and the New Zealand dollar to basically rally based on dollar weakness. But if they'll be as weak or even more weaker than the weakening US dollar, then the Swiss and the Japanese yen would come in to save sort of those who want to diversify into more protected portfolios. So if we look at dollar Swiss, that's why we're looking at this right now. As I said, the 1.00200 level is a very good level to look for possible sells. Now, further on, if we move to the down on the calendar, the Canadian GDP will also be in focus. Again, not putting too much importance on this. I have this massive wick on my chart here. I'm not sure if it's only me or if it's going to be updated. It doesn't look like this happened on any other Canadian pairs or US dollar pairs, so I'm just going to take this as a glitch on the chart for now. However, one thing to note, if you watched our preview, you could see that the we actually broke down on this neckline of the head and shoulders, negating this possible inverse head and shoulders pattern that would basically give us a buy. So right now we can probability is tilting to the downside, so any lower highs based on the intraday chart will serve as a means to sell the currency, a means for sellers to possibly come into this trade and then come down to the 130.80, 130.50, even the 130 level. To be honest, there's not a lot that would keep us from the 130 level. Moving on to the Eurozone, again, fundamentally, the flash CPI will be the EU-Eurozone's highlight. However, the euro is struggling for any direction at this point. Core CPI is expected to be unchanged despite some actual inflation number to improve. The core CPI measures the excludes food and services. And so at that point, if that remains unchanged, we could see further range on this euro dollar. It's an untradeable pair at this point. It has been untradeable ever since we came down to the 113 and we did not manage to make any clear higher highs or higher lows or even lower lows at that point. So massive range between these two. It is tradable on intraday if you're advanced, but it's not something that we would recommend staying into for more than one, possibly maximum of 2 days. Moving on to the pound right now, which again a quite interesting scenario here. So I did mention the 129 level on the pound last week, and I did say that if price comes down here, it could be a good buy scenario, and I'm still maintaining that. However, with this current volatility here, there's really no telling which side will basically take over, the buyers or the sellers. So here's the trick: is that this pound dollar rallied based on dollar weakness, but at the same time there was some positive dollar UK news announcements in terms of the vote put forward from Theresa May to actually be delayed again. Instead of putting the vote in front of Parliament this week, the vote will be held at 12th of March, which again gives time for the UK to renegotiate, negotiate, or find other solutions between this short time frame before the official exit. Now again, there have been headlines with the delay extending as further as 2 months or 3 months with the deadline of the actual exit. We're not gonna get into too much scenarios here, but the fact is, just because the dollar is ranging, or even if it's rallying at this point, if it goes into the rally for the next 1 or 2 days, we can't really rule out for the pound to be stronger if there's actually good news from the UK with its negotiation when it comes to the EU. So as you can see, technicals cannot be neglected either. So clear lower high based on the weekly, clear bullish candle overshadowing the previous spin bar candle, and now we have the 50 EMA, which price is trying to close above. So it is a sound technical advance, really, compared to how we were just 2 weeks ago on this pound. And so that is again something, a good opportunity to look at, and it's something that, again, it's not ready for us to take the trade. It's not ready for us to jump in quickly. It's more like having patience, laying back and waiting for price to come to us and to show us what we expect. And if that does happen, then by all means we can take a trade. Now again, just quickly moving back to the US and when it comes to the Australian dollar as well. So this is something that I'll watch on the Australian dollar. The Chinese manufacturing PMIs are going to be out as well. And again, based on how positive or negative those are, they tend to affect the Australian dollar. Again, not tradable at this time, but we want to see the fundamental development of, if anyone, of basically this possible rate cut that has been anticipated by Westpac, one of the largest banks in Australia. Whether this is something that will be confirmed by any other banks, whether this is something that the central bank will come out and comment on, there's just no way to know. But again, a better reason to be clued up on this is to know whether this Aussie or the New Zealand, the commodity-based currencies, are actually going to rally based on the dollar's weakness and based on safe haven inflows, or it is the Japanese yen and the Swiss's turn to actually show us some strength. And for now, technicals show that the Swiss is showing some strength by rallying against the dollar, and the dollar yen also the 111 level has been holding on to this nice resistance. And also if we check the weekly, we can see the 50 EMA there with plenty of deceleration. And so again, not ruled out for another sell on this one. Also, I believe Fibonacci is showing a 61%, almost to the dot there, 61% retracement. So again, the crosses that make up the opportunities for next week are basically the yen, the Swiss, the Aussie, the dollar, and possibly the pound. And that is really what we have for now. And be sure to check out our daily watch lists and check out our trade previews and reviews as well. See you guys next time. Cheers for now.